Yes, people, a very happy with all of you. So, guys, we're doing this chapter called as accounting process. In the accounting process, we begin with unit number 2 in the last class, which was how to prepare the ledger accounts. So, guys, what is ledger? Transactions which are recorded in either journal or subsidiary book. You have to post them. You have to post them. That is, re-record them to another place called as ledger accounts. That is in the accounts, and all the multiple accounts put together is called as ledgers. All the accounts put together is called as ledger. Ledger is called as principal book of accounts. It is also called as book of final entry. Wonderful. So ledger is basically a T-shaped accounts. If the transactions are recorded in the debit side of any ledger, we say that these amounts are debited to these accounts. And whenever I say this amount is recorded on the credit side, when we say these amounts are credited to the so and so accounts. Like that, once you start posting it, at the end, what will happen? Two things will happen. Either the ledger will balance on its own. Balancing of the ledger on its own means what? The amount on both the sides will be same. Amounts automatically on the both the sides will be same. It is called as automatic balancing of the ledger. But most of the cases, this will not happen. Most of the cases, this will not happen, which means you have to artificially balance the ledger by inserting the balance carry down. If you look at this question, the total of debit side looks bigger. It is how much? 350. And the total of credit side is only 150. So 350 minus 150 is how much? 250. Sorry, 200. And this 200 is what? The balance carried on of this ledger. For assets, always the balance carried on will come on the credit side. I said balance carried down. For assets, always balance carried on will come on the credit side, and the balance brought down will come on the debit side. Based on brought down balance or based on carried on balance, which will you decide whether this is debit balance or credit balance? Always based on the brought down balance, you'll decide whether the account is having a debit balance or credit balance. So if the ledger account has got the balance brought down on the debit side, it is said to have a debit balance. It is said to have a debit balance. Okay. Similarly, if I look at the liability account, the balance carried down will come at the debit side, and the balance brought down will come always at the credit side. So if any ledger account has the balance brought down on the credit side, it is said to have a credit balance. Now, looking at the balance brought down, only you will decide whether the ledger is asset or liability. A lot of people have a notion that, sir, land means by default asset, building means by default asset. Correct? Because land and building can never be liability. But there are certain other assets account which can become liability. For example, bank. If I have my money in the bank, it is asset because I own it. But if I withdraw more money than what I have, when I have the overdraft facility, I'll be discussing about the overdraft facility in detail when I do BRS. Means what? You are withdrawing money more than what you can withdraw. In that case, it becomes a liability. So, by name, looking at the name, you will not decide whether the particular account is asset or liability. By looking at the balance, you will decide. That is a different story. 90% of the cases we know whether this item will have what balance. For example, cash. Cash can never have credit balance because you can't withdraw more than what you have deposited. Example, cash account, debit what comes in? Debit what comes in? To increase asset, debit. To increase asset, debit. Credit what? Goes out. As per modern rule, to decrease asset, credit. Now, please tell me, total how much money do you have on the debit side? Total how much money do you have on debit side? 350. 350 is the maximum money that you have. Correct? Can I withdraw more than 350? No. At the maximum, what you can withdraw here is 350. If you withdraw full money also, the balance will become 0. It can never happen that the withdrawal could be 500. So 350 minus 500 is how much? 150. You are telling the balance carried on will come 150 here. Brought down will come 150 here. Is it ever going to be possible? Is it ever going to be possible? No. So cash by default, always it is asset because it can never have credit balance. Credit balance means what? I have to pay back. To whom will I pay back this money? Cash is my money. I can withdraw only that much money, how much I have deposited or how much I have. So I can't withdraw or pay more than what I already have. But bank is not like that case. Bank, if it is coming with overdraft facility, if it is coming with loan facility, then it can also convert to liability. Right? Land, building can never go liability. By default, always it is asset. So there are certain items, by name we know it is asset. It can never become liability. But there are certain assets. Looking at the balance only you can decide whether asset or liability. So bank balance is given. They've given one account, bank 10,000 balance. Debit balance, credit balance, nothing is mentioned. So you have to assume whether this is asset or liability. In that case, what is the best possible assumption that you can make? Obviously asset. We are making assumption, but in that also you have to make best assumption. Just for the sake of saying, we can't say this is a liability. Are able to follow? So you have to make a best case assumption. Hence you're losing the concentration. Here, okay. Now, till this we discussed, and we discussed that all the ledger having debit balance will go to the debit column of the trial balance, and all the ledger having the credit balance will go to the credit column of the trial balance. Okay. Then what did we discuss in last class? So we discussed two more things in the last class. So one, we discussed about the opening journal entry, and second, we discussed about the closing journal entry. Let me talk about the closing journal entry. I took example of sale account. In sale account, what happens? You record the transaction on day-to-day basis. You do the balancing on day-to-day basis. So on 1st April, I sold goods for cash. What is entry? Cash to sales. So in sales account, buy cash. So on 1/4, buy cash, let's say 1,000 rupees. No other transaction. So on 1/4, balance carry down will be 1,000. Next day will be what? 2/4 only. Next day will be 2/4. 2/4 will be balance brought down 1,000. Now, why I need this balance brought down? Because I want the sale to be accumulated. It should be accumulated. Every day I should keep on adding. So this opening balance will get added to the current year or current day's sale. So let's say 2nd April, one more time I'm selling the goods. So buy cash again. This time 500. So now what is my cumulative balance on 2nd April? Balance carried down is 1,500. So from if I see the total sales of 1 April and 2 April put together is how much? 1,500. So that is the power of balance brought down. It helps us to accumulate the values. So like that, I'll keep on traveling. So next day balance will be what? 3, 4. Balance brought down. Balance brought down. 1,500. Again 4, 4. Sorry, 3, 4. 3, 4. Again buy cash. 2,000 in sale I'm doing. I'm doing sale for 2,000 rupees. How much is the balance? Carry down on 3, 4 will be 3,500. Like this, the carry forward will happen up to what date? Up to 30 March. So 30 March by balance brought down. Let's say all put together from April to 30 April it is 1,50,000 rupees total sales. Now on 30, not April, March. On 30 March, I'm doing one more time sale. Buy cash, this time 5,000 rupees. Buy cash 5,000 rupees. Now what is my balance carried down on 30 March? Balance carried down 1,55,000. I will carry forward this next year. That is 31st March. 31st March. Buy balance brought on how much? 1,55,000. Now, last day of the year, I'm doing further sale. 31/3. Buy cash 15,000. 15,000. Now total is how much? 1,70,000. Closing balances 31/3. Initially balance carried down 1,70,000. And balance brought down will now be not 1/4. It will be 31/3 only. By balance brought down 1,70,000. Two things here important. One, sir, why are you putting 31/3? Please understand, in your school textbook, what they said is to put 1/4. 1/4 is not possible because now I'm preparing the current data for 23-24, which ends with 31st March 24. In this financial year, how will 1/4/24, which happens to be the date of next financial year, how will that date come in this old book? 1/4/24 will come in the new book. So technically, the old book, this will not come. But why they made you write 1/4 is to put a point in your mind that this will carry forward to next year. They wanted to put that seed in mind. Hence, they had to come out with this plan. Technically, this is not right. This is wrong. Am I clear? One point. Second, sir, 1,70,000 you're putting balance carried on and balance brought down. Now only you said that nominal ledgers are never, having any balance carried down. Then why did you do? Because I told first you have to prepare the draft trial balance 1. In that, I want all the balances to travel where? In the trial balance to check what? Arithmetical accuracy. Whether all the accounts is being captured or properly or not, I will be able to look at it or get the idea of it by looking at the trial balance. If the trial balance ka total, which total? Debit total, credit total matches, which means that we have ensured double entry system of accounting. We've ensured double entry system of accounting. So for that reason, initially you will put the balance And that is why in the trial balance, you see sales, purchase, everything is coming into picture. So whenever you get a question where all the accounts, that is personal, real, nominal, all the accounts are coming in trial balance, that is the draft trial balance 1. Am I loud and clear? Then now what happens? Now once you're assured that yes, the account is perfect, now you can go and transfer all this data where? To the trading and P&L account. So now I cannot allow a nominal ledger like sale, purchase ledger. I cannot allow their balances to get carry forwarded. I don't want the balance brought on. Why? Because if I let these ledger have the balances, then this will become the opening balance of next year. When this becomes the opening balance of next year, it will get accumulated in the next year. For example, 1/4 balance brought on becomes how much? 170. And on 1/4, if I'm doing any sale, let's say buy cash, 10,000 rupees. Now the closing balance of 1/4 next year will look like 1,80,000. So on 1/4, did you actually do sale of 180? No, it is only 10,000. But since you allowed to carry forward the nominal balance to next year, this disaster happened. To ensure this disaster doesn't happen, you have to ensure that this ledger is not having any balance. So once you prepare the draft trial balance 1, you are now supposed to pass an entry called as closing entry. All the nominal accounts at the end of the year should be transferred to trading and P&L account by passing a closing entry. Sale, while recording, what was the nature? What is the entry? Cash account debit to sale. To sale, cash account debit to sale. So to create the sale in the sale account, to create the sale value in the sale account, you give a credit. Now my intention is to close it. To cancel the sale, I have to give a sale in debit now. So sale account debit. Now where do you want to transfer this? To trading account. Why trading account? The logic we'll discuss in the final accounts. So to trading account. 1,70,000, 1,70,000. So in the sale account, to trading, this 170 I'll record. So now I will come back, erase this balance, carry down. Now what will I record? To trading account 170. Now this ledger will not have any further balance because this ledger is now automatically balancing. Now when you prepare the draft trial balance 2, in that trial balance, asset will be there, liability will be there, capital will be there, but no nominal accounts will be there because all the nominal accounts is now subsumed under one category called as trading and P&L account. So in that you will either have net profit or net loss. In that net profit or net loss will not be there if you transfer that to capital account. So if you transfer the net profit to capital account, then finally what will be there in the trial balance? Only asset, liability and capital. That's all. So everything is subsumed under these 3 activities. Any problem here? Online people, any problem here? Am I teaching anything new or are we discussing what we discussed in the last class? I'm doing a revision of the last class. Wonderful. So anybody's got any problem with the closing entry? No. This was the closing entry for income item. What is the closing entry for expense item? For expense, it is going to be expense to cash. So to create expense, you give a debit. To close expense, credit. So what is my closing entry? Trading account debit or P&L account debit to expenses. So apply the nominal rule and tell me. Tell me. Nominal rule, golden rule. Debit all expense and losses, credit all income and gain. Credit all income and gain. Credit all income and gain. Expense you put in. Apply now. Now the value will come. So in trading account, 2 expense is going and sitting on the debit side. So whenever you open a trading and P&L account, and in that trading and P&L account, if you find the income and expense item, it has come there only because of closing entry. Closing entry is one kind of transfer entry. But this is more than transfer entry. It has got its own purpose and meaning. So we gave a different name to it apart from transfer entry called as closing entry. This is also one kind of transferring the value from sale account to trading account. But this is not just a mere transfer. This transfer has got real essence into it. So we gave a different classification called as a closing entry. So by the word closing entry, what you understand? We're trying to close some account. Which account are we trying to close? Nominal. So that is how they fix the name closing entry. Any problem? So closing entry is passed in relation to all the nominal accounts. Then there's one more entry called as opening journal entry. What is opening journal entry? Correct. So now what happens is, this is the financial year. Though the business will continue for a foreseeable future, forever, but accounting says that you can't do that. For accounting, you have to halt. You have to give a gap and start afresh next year. So your financial year here could comprise of any date which you want to take. Even if you want Jan to December, that is calendar year as accounting year, you can do it. But if you do so, what will happen? Your accounting will be as per Jan to December, which will not be accepted by income tax department because according to them, they want April to May. So that is why, sorry, April to March. So that is why 99% cases or 99.5% cases, all the entities follow. Or forget that, 99.99% all the entities follow April to March. So that the accounting, what they have prepared, is in sync with the data that is being demanded by the income tax department. So that's why we follow Jan to December. Sorry, April to March. April to March. So 31st March, you close the books of accounts and you start accounting for the next year in a fresh new book. When I say fresh new book, olden days manual accounting, new book. Now, softwareized accounting, still it is new book only. New book here doesn't mean I'm taking literally the book, physical book. When I say new book means it is starting over all the fresh as a separate folder. In a separate folder, the accounting begins. And the folder name is what? 2526. Now, the problem is when you are halting the accounts here, when you're putting a stop here, there's a gap. Now, the problem is when there is a gap, the data will not travel forward. For example, if you see the entry that we recorded on 1st April, the entry that we recorded on 1st April, very conveniently, this got carried forward to next day because there is no gap. Continuously it kept on carrying forward. But now what happens, since you have closed the book and you're starting a new book, will the data of 31st March, which is cash balance, example, will the cash balance of 31st March automatically travel to next folder or next year? Not possible. You have to help them. You have to help all the personal and real accounts. In other words, all the asset, liability, and capital account, their balances to be carry forwarded. And for that reason, or for that purpose, you will take help of opening journal entry. This opening journal entry is a journal entry where all the asset, liability, capital as on 31st March will be carry forwarded to next year as their opening balance by passing the opening journal entry. Am I clear? So now for me to pass the opening journal entry, what data I require? I require the latest balance sheet, 31st March balance sheet. I want the audited balance sheet of 31st March. I want the final balance sheet of 31st March. So in the balance sheet, whatever data are there, asset, liability, and capital. For this, I have to pass the journal entry. When next financial year, 1st April, the first entry that you're recording is the opening entry. The very first entry that you record in any financial year, that is any consecutive financial year, it is opening journal entry. What is entry? Very simple. All the assets record in debit. Assets account debit. Individually record cash account debit, bank account debit, land account debit, like that. Individual assets. Two capital or two liability. Anything you can write. Two liabilities individually. Creditor, bank loan, etc. And finally, two capital. The moment you do this, the magic is there automatically in the respective ledger. Let's say cash ledger 1-4. Two balance brought down, the data will automatically come here. If I say capital account, by balance brought down, this amount will automatically come here. That is the beauty of the opening journal. So if you want the opening balance brought down on 1st April to travel in the next year, that is only possible when you pass a opening journal entry. Any problem here? Opening journal entry, the first entry passed in any financial year, not the first financial year. After the first financial year, because first financial year, there's nothing to record as opening balance, no. So except first financial year, all consecutive financial year will have the first entry as the opening entry, which enables the enterprise to carry forward the ledger balance of asset, liability, capital from the previous year to current year. So their balances can continue. Previous year cash balance, I should continue. Previous year bank balance, I have to continue. I can't throw it away. I have to continue. Till this we discussed in the last class. Correct? No? Now, let's take the question number 3, illustration 3 of your ICAI study module, which is in page number 2.59. Which is in 2.59. Can I read now? Okay. The following data is given by Mr. S, who's supposed to be the owner. So now please tell me if I'm doing accounting or if we are doing accounting. So can I say we are accountant of Mr. S? Correct? No? Okay. No energy. Yes, okay. With the request to compile only two personal account of Mr. H and Mr. R in his ledger for the month of April 22. So what are they trying to say? This person, Mr. S, is telling that, sir, I've done all the accounts from my side, but two party accounts I'm not able to prepare. I'm getting confused. So can you please help me to prepare the ledger balance of Mr. H and Mr. R? So we have been dealing with Mr. H and Mr. R. But who are they? Customer, supplier, vendor, no idea. By looking at the transactions, we will understand. The owner is asking you to prepare the ledger balance of Mr. H and Mr. R for the month of April 22. Okay, wonderful. My question goes to all of you. Can I say I'm preparing in the books of S? Anywhere while preparing the journal, anywhere while posting the transactions in ledger, will the name of S come anywhere in that? In the book of S, will I record S account debit, S account credit? So S will not come. Do you agree with me? So wherever I'm discussing about the transaction where S is coming into picture, I will not record S anywhere in the book. In my book, I will not record my name. First point. Second, I'm opening account. Let's say H's account. In H account, that is in H ledger, will you reflect H ka name anywhere? No. In its ledger, it will not come. In my book, it will come. In my book, H account will come. But in H account, H ka name will not come. Similarly, if I'm opening R's account, in my book, R account will come. But in R ledger, R's name will not come. That much you are clear? That much is everyone clear? Okay. Let's do the entry now. For that, I want all of you to take fresh page to prepare two ledger. If you have a lengthy page, you can divide into two half. One, I want you to open H account. Another, I want you to open R account. First is which account? H account, is it? Okay. Mr. H account. Debit, credit. Then Mr. R account. Again, debit, credit. Please remember to write date, particulars, amount. It says that on April 22. So now how do you write it? April 22. Under that, first one. S owes Mr. R. S owes Mr. R. So I can't decide whether this will come on debit side or credit side. So I'm just writing the date on both the sides. April 22, I'm writing on both the sides, but I don't know whether this is asset balance or liability balance. April 22. April 22. Now, S, who's S? We are S. S means we are owing money to 15,000 to R. We have to owe money means we have to pay money to R. So why are we supposed to pay money to R? Because we would have purchased the goods on credit. We would have purchased the goods on credit. So we have to pay him. So in my book, R is my creditor. So he's a liability. So can I say R being a liability, the balance brought on will come on debit side, sir. Will come on credit side. R. So on first, by balance brought down. By balance brought down is how much? 15,000. Any problem in this? Online people, any problem in this?
No, sir.
Then Mr. H owes. He is owing money to us. Means we have to receive. Anything that you have to receive in future is asset. Asset is what balance? Debit balance. So two balance brought down 20,000. So on 1/4, or we can just write 1 year. 1. 2 balance brought down is 20,000. Any problem? Comfortable so far? Okay. Now on 4th April, what is happening? Sir, Mr. R sold goods worth 60,000 at 10% trade discount to Mr. S. Where is the concept of trade discount? In your so-called journal, unit 1. Was there? Journal was there. Explanation was there. Where? Now, tell me people, how do I calculate this? This 60,000 is what? List price, catalog price, mark price. From the purchaser's point of view, gross purchase price. From seller's point of view, gross selling price is how much? 60,000. Sir, add trade discount 10%. Sir, less trade discount at the rate of 10%. How much it is? 6,000. Balance is how much? 54,000. So we will record the purchase and sale entry at 60,000 rupees. Sir, we'll always record at net value. So net purchase value or net sale value or net purchase price or net sale price. Okay. Entry please. Sale pa. How many of you thought this is sale? Be honest. How many of you thought this is sale entry? Be honest. 1, 2. Anybody else? Be honest. Raise your hand. Properly. 2 people only. Others. One. No? Oh, sorry. Sorry. Okay. 2 people. Others, you got it rightly? Yes. Now, if you see here, they try to play a game with us. The game is that they didn't say directly that we purchased 60,000 worth goods at trade discount of 10%. They said R is selling. Am I accounting for R? No, we are accounting for S. If R is selling the goods to Mr. S, we are Mr. S, we are Mr. S who is buying goods from R. So we are accounting from our viewpoint. So it should be what? Purchase. So now purchase should be at net value 54,000. What is the journal entry? Purchase account debit to R. Purchase to R. Now we are doing in our account. In our account, buy purchase. In our account, buy purchase. $54,000. So below itself, we can show the calculation. 60,000 minus 6,000. 54,000. Any problem? No problem. 5th one. Mr. S sold to Mr. H goods priced at 30,000. Sale transaction or purchase transaction? Think it. Now, always think from the point of view of S. Mr. S sold to Mr. H. So we sold. So it's a sale entry. So I have sold these goods at cash or on discount. In this entire transaction, nowhere it is mentioned that we received the money. So this is not a cash transaction. It is a credit transaction. So what is a credit sale entry? Debtor to sale. Who is debtor here? H. So H account debit to sale. Sale, I've credited it because it is my income. To increase income, credit. H is asset. To increase asset, debit. So H account debit to sale. So in H account, to sale. To sale. 5th one, to sale. How much it is? 30,000. There's no trade discount here. So nothing to worry. Directly you can record at the net price. This itself becomes net price. Tell me how. If 30,000 is the gross price and no trade discount, this automatically becomes my net price. That's all. Okay. Now, 17th one. Record a purchase of rupees 25,000. Net 25,000 is net purchase from R, which was or which were sold to H at a profit of 15,000. You have red color pen? Take it. Always have to carry. Why? Because you have to put danger symbol here. Teeth. Danger symbol. Record a purchase of 25,000 from R. So basically, who has purchased from R? We are purchasing from R. So we have purchased from R goods worth 25,000. And this purchase is net purchase. There's no trade discount. So basically, from R, we have purchased 25,000 worth of goods on credit. And that we are selling it to whom? H at a profit of 15,000. So in this one line, there are 2 transactions. That's what accounting process says. No, accounting is a systematic process of identifying the business financial transaction. In this line, there are two transactions. One is transaction with R, second is transaction with H. So if you don't know how to segregate the transaction, then how will you account it? So segregation of the transaction is very, very important. Identification of the business financial transaction is even more important. So now please tell me, what is the journal entry for purchase from R? We are purchasing. Purchase account debit to R. Purchase is expenses. To record expense, expenses debit balance. To record expense, debit. R is credit R. Means liability holders. Having what balance? Credit balance. To increase liability, credit. The more and more goods I purchase on credit, my liability increases, no boss. So therefore, to increase my liability, I have to give a credit. So what is the entry? Purchase to R. In R account, by purchase. 17th April. By purchase. How much people? 25,000. Okay. This 25,000 worth of goods is sold to whom? At sold to H at a profit of 15,000. Now, have they given the selling price directly? No, they are wanting you to calculate the selling price. So, what is the formula for selling price? Selling price is equal to cost price plus profit. What is the cost price? 25,000. What is the profit? 15,000. What is the selling value? 40,000. So we have sold the goods to H worth 40,000 rupees. So this is cash transaction or credit transaction? Again, credit transaction, because nowhere they have told that we have received money for this transaction. So this is again a credit transaction. Entry, please. H account debit to sales. In H account, to sales. 17. To sale. Don't write 15,000 income. That 15,000 is profit element. Your recorded selling value. Selling value will comprise of two value, cost and profit both put together. 25,000, 15,000 both put together, which is 40,000. So far done? Easy? Should say very easy. So far easy? Very good. Sometime, even in the negative situation, try to be positive. So that how much of the situation is negative, with your positive intent, attitude, somewhere you'll have a ray of hope. With that, you can hold it and come out. This is not just for accounts. I'm telling you, till you die, at the end, life is going to be full of negativity only. You need just one situation, one person who can take you out of this problem by giving a positive hope. So always look up for the positive hope. Now, Mr. S rejected. Mr. S rejected. Who's Mr. S? Debtor or creditor? Debtor or creditor? Sir, Mr. S is we, sir. Mr. S rejected means we rejected, because you have to be very clear who's having what role. H is debtor, R is creditor, S is we. We rejected 10% of Mr. R's goods on 4th April. So whatever the goods is purchased on 4th April, in that there was some defect. And by that virtue, we had returned 10% of the goods. So please tell me, purchase return or sale return? So from R we purchased. So that if I'm returning, it is called as purchase return. What is another name for purchase return? Return inward or outward? Outward. Now understand this. People often get confused. Return inward means somebody's returned the goods and that is coming inside the business. So when does the goods come inside the business while returning? I sold goods to the customer. Customer did not like it. He returned it back. So that goods is coming inside the business. So return inward means sales return. Return outward means what? The return is going out. When does it go out? I purchase the goods. I don't like it. I'm returning it back. So I'm returning the goods outside. It is going outside the business. The goods is traveling outside the business. So it is purchase return. So what transaction is this? Sales return or purchase return? Purchase return. Wonderful. Please tell me the journal entry for purchase return. Can I make you all write the journal entry also? Because today you will be able to manage. Tomorrow you'll have a difficulty. Can we do journal also? So you have taken one entire page for this. Can we do journal now? Okay. Let's do journal first. I have a strong feeling that for this complicated question, if you just do ledger, it will not be sufficient. You have to do journal. Write one more extra column, classification. Will any journal entry come for Mr. S is owing money to R and Mr. H owes money to S? For this entry will come? Technically it will come. But this will not come as an individual entry like this. This entry would have happened on 1st April while we pass the opening balance entry for all the assets and liability put together. Now, while preparing these two ledgers separately, opening journal entry will not pass. Opening journal entry is passed definitely, but that is for all the assets and liabilities put together. Since they are asking us to prepare only the balance of H and R, I'm presuming that while recording opening journal entry, for this also the entry is passed. So again, I'm not recording here. 4th entry, purchase entry, please. 4/4/2022. Purchase account debit to R's account from Mr. R's account. Purchase classification as per modern rule. Expense. Here the expense is increasing or decreasing? Increasing. So debit or credit? Debit. How much value? 60,000 minus 10% trade discount, which is 6,000. So it is 54,000. R is what classification? Liability. Liability. And here is liability increasing or decreasing? The more credit purchase, liability will increase only. So increase in liability 54,000. Narration will manage. Okay. Then 5th April 5/4/22. What happened? Sir, we sold goods to H on credit. So entry was what? H account debit to sales. H what classification? As per modern rule. Asset. Balance is increasing or decreasing? Increasing. To increase asset, debit. Sale is revenue and the balance is increasing. More sales, more income. More income, income will increase. So again, to increase income, we have to give a credit because income is credit balance. Then 17th April, 2 transactions. First is credit purchase transaction. What is entry? Purchase account debit to R's account. How much? 25,000, 25,000. Can I say same classification? Expense increases, liability also increases. On the same day, what is happening? Credit sale. To whom? H. So 17th April 22. H account debit to sale. Same classification. H is asset, debtor increasing. Sale is revenue increasing. How much it is? 40,000. Below, please write selling price is equal to cost price plus profit. Cost price is 25,000. Profit is 15,000. So your selling price is 40,000. So when you revise in future, it will be easy. So far, any problem? No problem. Now what is happening? Sir, on 18th April, we rejected the goods that we purchased from R on 4th April. So 18th of April 22. What is the journal entry for purchase return? Purchase return belongs to which family? Purchase family. To increase purchase, debit. To decrease purchase, credit. So I have to credit purchase return here. To purchase return. When we purchase the goods, we promise I'll pay you so much. Now, when we return the goods to him, will I still pay this money to him? No. So the money that I promised him to pay, that promise I need to cancel. I said I'll pay this money in future. For that, I created a liability. Now I'm not going to pay the money to this extent. So I have to cancel the liability. To create liability, credit. To reverse liability, debit. So R's account debit. R's account debit to purchase return. R is what? Liability. Here, while returning the goods, your liability is increasing or decreasing? Liability is decreasing. Liability is what balance? Credit balance. To increase liability, credit. To decrease liability, debit. And purchase return is what? Expense family. To increase expense, debit. To decrease expense, credit. Now the question is amount. So 10%, no sir. 10% of April 4 transaction is 60,000, sir. 60,000 ka 10%, sir. 6,000, sir. How many of you said 6,000? Or how many of you thought 6,000? Opinion? No? Nobody? Why? Sir, we never recorded the expense. We never recorded the liability at the gross value. Then why will I return at the gross value? Think about it. No. When I recorded the entry, when you recorded this entry, at what value did you record? You recorded the gross selling value or gross purchase value. Purchase value. Gross, net. So we recorded the net purchase value. Net purchase value. So when I created the expense, it is at the net value. When I created liability, it is at the net value. So when I'm reversing, reversal should also happen at the net value. No? So 54,000 means 54,000 worth of goods you have purchased. So this is equal to 100%. This is 100% of the goods that I purchased. In that 10% I'm returning. So if this is equal to 100%, then for 10%, how much? Cross multiply. 54,000 to 10 by 100. So it is 5,400. So all your formula is deriving from the vegetable vendor technique. So you should be thankful to whom? All the nearby vegetable vendors will be there. No, go every day morning. Thank you so much for the formula. Every day you have to go and thank him. So now 54,000 into 10 by 100. 5,400, 5,400. Any problem in this so far? Online people, any problem so far?
No, sir.
Only one person respond online, others are nicely sleeping. Tell me.
No problem, sir.
Everybody, open your mouth and respond, please. Ria?
No doubt, sir.
Now, 19 transaction, market slightly dangerous, not very dangerous, slightly dangerous. The wording is like that. Mr. S issued a cash memo for rupees 10,000 to Mr. H, who came personally for this consignment of goods urgently needed by him. What a confusion line. Look at the language what they have told. I tell you what this language is. The way they have created hype, no. Mr. S issued a cash memo of rupees 10,000 to Mr. H, who came personally for this consignment of goods urgently needed by him. This donkey fellow wanted goods. So he came directly to our shop and we sold 10,000 worth of goods on the spot, taking cash. So this is a cash sale. This is a cash sale. Understand how this is a cash sale. Mr. S issued a cash memo of rupees 10,000. What is cash memo? Cash memo is nothing but cash voucher. So whenever somebody is giving me amount, I have to give acknowledgement that I received the money. So I give a voucher, cash voucher, or called as cash memo. In that cash memo, we'll have the details. Who is the person who gave the money? Who is the person who received the money? On which date the money was exchanged? And what is the reason for exchanging goods? All the details will be captured in this document called as cash voucher or cash memo. This is also called as cash voucher, receipt cash voucher, payment cash voucher. So on the spot, if I'm giving a cash memo means what? I am collecting the money. And this guy came personally for this consignment. Consignment is nothing but the goods what I'm selling. No, to take that goods, the delivery of that goods, he came to my shop directly because he was in urgent need of money. Otherwise, if he was not in urgent need of money, he will do the order on phone. I will take my own sweet time to send the product. But this time it was urgent. So he said that you don't send. I will myself come and collect. Not just collect. I will also pay the money on spot. That much urgent need it was. So this is nothing but your cash sale transaction where we are selling the goods to Mr. H. Delivery is happening immediately. Against that, money also is getting received immediately. So what is this transaction? It is a cash sale transaction. This is a cash sale transaction. What is the journal entry for cash sale? Cash account debit to sales. On which date? 19th April. 19/4/22. Cash account debit. Sorry? नहीं डाला, अभी डाल देंगे. Cash account debit to sale. Cash account debit to sale. Cash is what balance? Asset balance. If I keep on getting the asset, cash, what will be the impact on the balance? It will keep on increasing. To that, what am I supposed to do? Give a debit. Sale is my revenue. If I keep on doing more sale, revenue will increase. To increase income, credit 10,000. Now, these two transactions, that is last two transaction, was not posted in the ledger. So can be posted. First, let's go to 18.4. 18.4, what is the posting? R2 purchase return. So in our account, 2 purchase return. To purchase return. How much people? 5,400. Okay. If I'm not doing the journal, then I have to show the calculation here. 54,000 into 10 percentage. Somewhere I have to show the calculation. If they're asking both, and in journal, if you show the calculation, again ledger not required. Now, sir, cash account debit to sales. H account, in H account, buy cash, to cash, what will come? Sir, this ledger is not, sorry, this journal entry is not affecting my ledger. Which ledger? H ledger or R ledger is not affecting. So this will not be passed anywhere in the books of accounts. Now, important note of this has to be given like this. This will carry mark. Sale of rupees 10,000 on 19th April in cash is a cash sale. Therefore, it will not be recorded in the personal account of Mr. H. Boss, I have received the money. I've sold the goods. I've received the money. When I've received the money, should I remember that I should collect this much money from H in future? Not required. When will I record the transaction in H account? When I need to remember to collect this money from H in future. That time I will record the transaction in my memory. Recording the transaction in H account is as good as recording the transaction in my memory. Now, when money is already collected on the spot, is there a need for me to record this in the data account? Not required. Directly cash entry. So this you have to give a disclosure, and this will carry mark, either quarter mark or half mark or 1 mark, depending on the allocation of the mark. Now, a lot of people, what they do is, if this question comes in exam, they know that this transaction will not be posted in the ledger. So they'll not post the transaction ledger. At the same time, they will not record this line also come. If you don't write this, half mark gone. So giving this important information. Arey Baba, the person who's keeping the exam for you, he wants to know that you know the concept or not. So you know that this cash transaction should not be recorded. Means you have to tell him no, that I know. In exam, we have to showcase our knowledge and talent. So you have to tell that I know cash transactions are not recorded. So this note is very, very important. This will carry quarter to half to 1 mark. Any problem so far? Loudly. No, sir. Okay. Online people, so far comfortable?
Yes, sir.
Now, Mr. H. Mr. H. Who's Mr. H? Debtor. Our customer, debtor, cleared half his total dues to Mr. S, enjoying a 0.5% cash discount. 0.5% means what? 0.5% cash discount of the payment, and of the payment that we received, 20,000 was in check. I'll repeat one more time. For that, first you have to go to ledger and tell me how much money are we expecting from H totally so far. Sir, from H I have to receive opening balance 20,000, means 20,000 worth of goods I sold last year, but last year money not received, so I'll receive in current year. I should receive in current year. Plus current year I did a credit sale of 30,000, so total how much I need? 50. Plus I did one more credit sale for 40,000. Total how much money I need? 90,000 I need. So total money due from H, 90,000. So working note number 1, what heading I'll tell you now. Please don't write. Total money due from H is equal to 90,000. Any problem? Now I'm doing a presentation in a manner which you can understand. No, don't do anything. Wait. The question says that half of due were received now by giving a cash discount, not check, cash discount of 0.5%. Understand? How much money totally we are supposed to receive from H? 90,000. In that, he is paying half of the due now. Half the due is paying now. Half the due is paying now. How much it is? 45,000. And this 45,000, are you getting full amount? No. To get this 45,000, you have given an offer. What offer was yours? If you're giving me money now, I'll give you 0.5% cash discount. So this is your cash discount. Less cash discount, 0.5%. How much? 45,000 into 0.5 percentage. It is how much? 225. So from 45,000, if I minus 225, what is the balance money that I'm getting? 44,775. So now you're receiving how much money from him? 44,775. One more time. Total, how much money are you expecting from him? 90,000. In there, how much money is paying now? Half of the dues is paying now. How much? 45,000. Is he paying the full 45,000? No, because you have offered a 0.5% cash discount. You're telling, don't pay me 225, pay me the balance. How much? 44,775. In that, of the payment that you're going to receive, how much payment you're going to receive? 44,775. In that, 20,000 was given by way of check. So in this, by way of check, how much are you getting? 20,000. So balance is coming in form of cash. This is your balancing figure. How much? 24,775. Any problem? Can you copy paste this now? Half of the dues were received now by giving a cash discount of 0.5%. Half of 90,000 is 45,000. This part is over. Till this you've copied? Okay. Now, can you please tell a journal entry for this? I'm doing an entry here, but we'll do it in the proper journal place. I'm just doing here for your understanding. Don't copy paste here. Do the journal in the main journal. Sir, we are going to receive the money. We are going to receive the money. Bank account debit. How much? 20,000. The money which I got in form of check, that check will be deposited in bank. So money will come back in bank. So debit the receiver. To increase asset balance in bank, debit bank. Then cash account debit 24,775. And this discount you offered, it is your loss. It is your loss. You forgo your money. Debit all expense and losses. So cash discount allowed account debit how much? 225. To H account 45,000. Guys, to the extent of 45,000, I have to close this balance. This is the ledger entry. Any problem in this? Online people, any problem in this? Online people, no response. Okay. Now, this transaction is happening on which date? 22nd April. 22 April 22. Bank account debit. Cash account debit. Discount allowed account debit to H account. So I have to close H account by 45,000 rupees. How did you close? So out of this 45,000, 20,000 received in form of check. 24,775 is it? Received in form of cash. And balance? 225 not received. You will never receive. It's a permanent loss. Debit all expansion losses. Bank is asset. And here the balance is going to increase. Cash is asset. The balance is going to increase. Discount allowed is a loss coming under expense category, but more full it is a loss. And more cash discount if I give, more loss will increase. To increase loss, debit, because expenses loss are debit balance. To increase, you have to give a debit. And H is asset. And here asset balance is reducing. So I gave a credit. Now, what type of journal entry is this? Simple or compound? Compound journal entry. In compound journal entry, what did I tell you? Whenever or wherever you have the compounded amount, you have to break the compounded amount into that many parts, which is there on the opposite side. Opposite side, how many parts we have? 3 parts. Break into 3 parts. 20,000, 24,775 and 225. In exam, will you sit and break it and show it there? All that will happen in mind. Now, how do you do the posting? So record 20,000 where? In the credit side of H's account. And who's the opposite partner for this 20,000? Bank. So by bank, 20,000. So this 20,000 is what is getting recorded in H account and not this 20,000. Be very careful. This 20,000 is what is recorded in H's account and not this. So go to H account. By bank. 22nd April, correct? So by bank. 20,000. By cash 24,775 and then 225 is it? By discount allowed. Can you get DA income in exam? No. By discount allowed. So record this 24,775 in the credit side of H's account. And who's opposite partner? By cash. Record this 225, not this 225. Record this 225 in the credit side of H account. Who's opposite partner? Discount allowed. Online people, any problem so far?
No, sir.
Very good. Now, 22nd point is clear. Can I go to 26th transaction? 26th, R's total due. R means who here? Credit R. Total due. Total due. Total due. Less 10,000 held back. Less 10,000 held back means what? They want that ledger to have a balance carried down 10,000. They're telling that whatever is total due. Let's say total due is 50,000. Example. In that, keep 10,000 holding it. Means keep it as balance and pay balance 40. So from 55 minus 10, balance carried down. What amount I'm paying? 40,000 I'm paying. I'm taking a roughly figure. Now, R's total due, less 10% held back, were cleared by check. The payment is done through check. Enjoying a cash discount of rupees 1,000 on the payment made. So whatever payment we're doing, no, for that, he has offered a discount and we have received the discount. Cash discount of 1,000 means while making the payment, we are not paying this 1,000 rupees. So it is discount received by us, discount allowed by the opposite party. We are recording from our point of view. So this is discount received. Now, don't do anything, just observe. Come back to R's ledger. Please tell me, what is the total due to R? Sir, we have to pay 15,000 to R in form of opening balance. Means what? 15,000 worth of goods were purchased last year, but payment was not done last year. Now we are going to do. Plus, current year, this much we have purchased. So total how much money we have to pay him? Total how much money we have to pay him? 94,000 we have to pay him. In that, 5,400 worth of goods have returned. To that extent, I'll not pay him the money. So minus 5,400. How much is the balance money that we owe to him? Sorry? 88,600 is the balance money that we owe to him. 88,600 is the balance money that we owe to him. In that, they're telling that keep 10,000 as balance. Keep 10,000 as balance. So how much I'm paying now? 78,600 I'm paying. In that, how much money I'm not paying? 1,000 rupees I'm not paying. So 77,600 is the actual money that I'm going to pay. One more time. Okay. Working note 2. Calculation of money paid to R. This is what is the ultimate purpose, no? And what is the working note 1 heading? Calculation of money received from H. total money, you can do along with me. Total money due to be paid to R is how much? In bracket 15,000, I'm writing for your knowledge, in exam not required. 15,000 plus 25,000 plus 54,000 minus 5,400. So how much money was due? 88,600. This no need to show in exam and waste time. This is done. So tomorrow when you revise, it becomes easy to understand. Less balance to be held back. That is balance carried on of the ledger. You want the balance to be 10,000. So how much money is paid? Or the account is closed to the extent of 78,600. Account to be closed to this extent. Account to be closed to this extent. In that, less cash discount received. How much? 1,000. Balance is 77,600. What is it? Money paid to R. Okay. Any problem in understanding this? What happened, Bharat? Which second one? This one. The question says that R's total due. How much is his total due? 88,600. Less 10,000 held back. Means what? Don't pay the entire amount. Keep 10,000 pending. Means what? Balance. Balance amount you pay. So from 88,600, if I hold 10,000 payment, how much balance payment I'm releasing? 78,600. And to release this payment, what is the deal that I made? I told him to give me 1,000 discount. So after holding back 1,000 discount, how much money I'm going to pay him? 77,600. Now clear. Now I'm doing entry here for namesake. Now my intention is to close R account. R is liability holder. To create liability credit. To close liability debit. So R account debit. R account debit. How much I'm supposed to close? Account to be closed to this extent. That is why I wrote this. Accounts to be closed to this extent. 78,600. How did you close this account? Sir, by making the payment. How much money you paid? So to bank 77,600. What happened to 1,000? He gave me discount. This is my permanent gain. Credit all income and gain. So to discount received. This is the entry. Can we record that? Okay. What is the date? 26. 26 April 22. R's account debit to bank account because the payment is done through check to bank account to discount receipt. R is liability, and here upon the payment the liability is decreasing. Bank is asset. Upon making the payment the balance is decreasing. Discount received is expense or loss. The more income or revenue or income, revenue or gain. And the more discount that I receive, more revenue will increase. So liability is credit balance. To increase liability, credit. To decrease liability, debit. Asset, debit balance. To increase asset, debit. To decrease asset, credit. Discount, gain, credit balance. To increase gain, credit. To decrease gain, debit. Amount, please. 78,600, 77,600, and this is 1,000. So now, this is a compound entry. Break this into how many parts? Into that many parts which is there on the opposite side. Opposite side we have two parts. So 77,600 and 1,000. So now record 77,600. Where? Sir, in the debit side of R's ledger. And who's the opposite party for this? Bank. So it should be to bank 77,600. So in the R account, to bank 77,600 which I record, I don't record this 77,600. I'm recording this 77,600. This understanding is very, very important. To bank 77,600. And then to discount received to discount received. How much? 1000. What date it is? 26. Now tell me, people, automatically the balance of this ledger is going to be 10,000. But I'll not put it now. Let's see if there's any other transaction. But if you balance the ledger right now, the balance carried out with the ledger is going to be automatically 10,000. But we have to see if there is any other further transactions. I'm not putting any balance for now. It's not going. Anyways. Coming back. 29th. Oh, okay. This 29th is talking about H. So nothing about R. And 30 points is balance R's account. Can we balance it now? When we balance, what will come? Yes, 10,000. Which side? For liability, balance category will come on debit side, brought down on credit side. So now, on 26th, to balance carry down. Sorry, it should be 30. Always the balancing at the end of the month. If it is monthly data, balancing will be done at the end of the month. 30 April, to balance carry down how much? 10,000. Okay. One person left the meeting. Who's that? Now, you remember anybody name? Hemashri. Okay. So college mate, huh? That's why you remember. Now, final guys, final transaction 29th April. Close H's account. You have to close now H account by balancing to record the fact, to record a situation that all except 5,000 was cleared by him by a check because he was declared bankrupt. Now tell me what is happening here. Can somebody explain me this point? Any volunteers?
5,000 can never be recovered.
Whatever is the balance amount, in that 5,000 can never be recovered. So that is bad debt. So balance amount is recovered. So you itself told everything. Then what is the point? Okay. One more time. We have to close H's account. And the important point here is to be noted is that all the balance due was cleared by him. Forget this. All the balance that was due was cleared by him in form of check, except a rupee of 5,000. Except a rupee of 5,000. Okay, sometime you need to understand the knack of reading the question, how the question to be read, in which way if I read it will be more sensible question. That understanding is very important. So how did I read this point? I am trying to close H's account. Why? Because all the money was cleared by him. All the money was cleared by him in form of check. Except 5,000. Why is not giving 5,000? Because he was declared bankrupt. Now makes more sense. On purpose, they have jumbled this question in a way that they can put you in fix. They try to complicate the English language. So in accounting, how much important is to have the hold on the accounting concepts? Equally, it is important to have the hold on English language. Vocabulary should be improved. Now, this is one of the primary reasons why I stopped taking classes in Tamil. If you say in 2019, all the classes of accounting used to be in Tamil. But problem is, people have a great difficulty. They have great difficulty while writing the exam. Because in English at that moment, in Tamil language, at that moment, you might understand the concept while explaining in the class. But when the same thing has to go, you should go home and when you try to do on your own self, that time that flow is not coming. So language is something which comes only through practice. So all of you have your respective mother tongue. Did you learn in the tummy and came out? So once you came out, the more you hear, you became confident and strong at that particular language. So language is such a thing that the more you listen to it, the more you speak, automatically become a pro in it. Right? So if you feel that you're having, somewhere a lesser hold on the vocabulary of English, you have to work out from that. You have to work more hard so that one point should come where you should feel more comfortable with the language. And that will come only if you have an intent to work towards that weakness. I'm telling you, everybody invariably has that weakness. You might say that I'm studying in CBSE. There's no guarantee that a CBSE student has got a very good hold on the English vocabulary. So don't have any overconfidence. If you feel that you're not having a hold, work towards it relentlessly. And a person who's coming from state board or matriculation background might feel that, no, sir, in my school, I was talking mostly in Tamil, so I don't have the hold. You might not have the hold. That situation is not under your control. This situation is under your control. Can you have a empowerment on that? Can you bounce back and make the language stronger? Possible. How? Classes should be heard in English. Whatever quantity you're listening, listen in English. The more you listen in English, you get better at it. Try to speak in English. Try to write in English. The more you listen, the more you speak, the more you write in English, automatically you'll get better at English. Getting better at English is not a big deal for accounting. Still, it is manageable. If you don't get a hold on it, still manageable. How much will you lose? 100 marks will lose? Full? No. 10, 20, 30 here and there you'll lose it. Anyways, you'll pass. But not getting over a command on the English language, if not in accounts, it can be a big problem in law, in foundation. It could be a big problem in economics in foundation. It could be a big problem in law, income tax, GST, audit in inter and final. So there is no choice. You have to have a good command over the English language. So whatever happened so far, don't think about it. What you can do from here is what your attitude towards that should be. Am I loud and clear? Wonderful. Now, let's go to H's account. What is the balance of H account? So come back here, 90,000 was the total money due from him. In that, half is cleared. So can I say remaining is how much? Remaining half. So remaining half is how much? 45,000. In that 5,000 is bad debt. How much money is received? 40,000 is received in form of check. So the money is coming in form of bank. Any problem? So now please tell me, what should be the entry for this? Receiving the money, bank account debit, bad debt, loss account debit, and to that extent you're closing H's account. So 2H. So bank bad debt to H. This is on 29th. 29/4/22. Sir, I'm receiving the money. Debit what comes in, debit the receiver, whatever you say. Bank account debit. How much? 40,000. And you're closing H's account to the extent of 45,000. So H's account 45,000. How did you close his account 45,000? Because 40,000 I received. What happened to balance 5,000? So I'm never ever going to receive. It is permanent loss. So it is a bad debt. And now please understand, discount allowed is permanent loss. Bad debt also is permanent loss. But what is the difference? Discount allowed means you voluntarily said, don't give me the money. Bad debt, you never said, don't give the money. You want the money, but you can't get the money because the person has become bankrupt. What is the meaning of bankrupt? Bankrupt means the person has become pauper, insolvent. Have you all seen this movie called as Shivaji? Rajinikanth Shivaji. What movie is that? Black Money. Yeah. He was settled where? America. He came down to India. What? He wanted to open a lot of colleges, medical institutions, medical hospitals so that he can provide the service at free of cost or probably lower cost. What happened? The villain cornered him. He made him, fall into a trap where he eventually lost all the money by giving bribes. Plus the money that he's invested in the project, everything came on hold. The project never materialized. So all the money was invested, plus the building, everything was halted. So nothing could materialize. And eventually the judgment came that he's become a bankrupt. He doesn't have any money left over. So if you remember, there's a scene where Rajinikanth is walking out of his bungalow, carrying suitcase in hand. And there are two people sitting there. Correct? No? He's saying that, sir, you can't take any luggage out of this house. Everything is there in this list. Plus, the Rolex watch, what you're wearing, that also is in the list. That also you have to give. Please tell me, those two people who were telling not to take the luggage, not to take the watch, who were they? They were technically called as official receiver. They are called as what? Official receiver. You will come across this term in your syllabus. They are called as official receiver. These are the people appointed by the court to take over the control of the assets and liabilities of everything of the person who's become bankrupt. So these person will take over the control of all the assets and liabilities. And now one by one, they will sell all the assets. From that, whatever money comes, they'll properly make the payment as per the instruction of the court. The court, while declaring the person bankrupt, will give the order in which the payment is supposed to be done. So official receiver is a person who will execute the entire judgment that has been given by the court. The court gave the judgment, no, somebody has to execute it. So official receiver does the execution. So those two monkeys were sitting and making all the note, telling their Rolex watch also is an analyst. Who are they? Official receiver in charge of the government. Now tell me. That position, what Rajnikant was there in that movie, that position is being called as a position of bankruptcy. That position is called as position of bankruptcy. Bankrupt means what? A person becomes pauper, doesn't have anything. Nothing. And all his assets, liabilities are now under the control of the court. So now this money permanently I'm not going to receive because the person, opposite person, Mr. H is declared as insolvent. Even though I want this money, but I can't get this money. It's a loss. So I feel a pain in heart, too much pain, more than the discount allowed. So this is a bad debt. Difference is there in the emotion. Discount allowed I'm giving, though the pain is there, but the pain is very less. Because I have the enjoyment that what money I want, I'm getting. Chiller amount, 1,000 rupees only going, no. That time pain is there, not that much pain. But here, 5,000 is not coming, heavy pain. So that is the difference between both the emotions. So bad debt account debit. Bad debt account debit 5,000. Posting in H's account. Buy bank, buy bad debt 40,000 and 50,000. Sorry, 40,000 and 5,000. This 40,000 and this 5,000. Not this 40,000, not this 5,000 is posted in H's account. Please be very careful. On 29th, correct? Buy bank, how much? 40,000. On 29th, buy bad debt, how much? 5,000. The ledger will now automatically close. There'll be no balance. Everything is closed. Total is how much? 90,000, 90,000. Now guys, this is how you prepare the ledger in CA Foundation. Welcome to CA Foundation. With the clap, nice. Perfectly matching. With this, what I want to make you understand is that all the units, all the chapters that we're going to study is going to be of this level only. So if you are feeling that if I have not studied my 11th and 12th properly, I'll get one more chance here in foundation to get it right. You're right. But the problem is the questions what are given are not like that. All the questions are the advanced level. So if you're not clear with the basic level, if you directly come and sit in the advanced level, chances are there here and there things might not be understandable. And your entire base will be very weak. So I told you that before you come and sit in my foundation classes, you have to either sit and watch my 11th and 12th CBC classes or you have to do the sums from TS Rival book, either of the cases. Get the hold on the basic concepts. Then come and sit in the advanced concept. Things becomes more easier for you. Correct? You see the ledger question which is given in the TS Rival book. Complication is there, but not this complicated. And here the very third illustration is the complicated illustration. So in that case, all the chapters, now forget this is at least third question you got challenging one. In some unit, some chapter, the very first question itself is going to be a bouncer. So if you're not strong with the basics, you'll be struggling. So before you come to the next class, ensure that the respective questions of the chapter from the TS Rival book should be completed. So you have a strong base. True and false, please take it as homework. When you do homework, how the homework should be, how people do the homework, A ledger is also known as principal books of account. They'll not apply the brain. Directly go and see the answer. Oh, true. Oh, this reason. Okay. No. Whenever you see true and false, what are you supposed to do? Frame the answer in mind, true or false. Not just the answer, also the reasoning. And see whether your reasoning and the reasoning given in textbook is matching or not matching. I don't say 100% it should match. But the key word, what they're trying to communicate, that keyword should bare minimum match. Grammatically, you can form your own sentence. Grammatically, you can form your own sentence. But the keyword should match. Am I clear? So true and false of even previous unit, which is unit 1, journal. That true and false is your homework completely. This true and false is homework. MCQ also homework. Now you will tell, sir, MCQ is not there in syllabus. Right? Agreed. MCQ is not there in syllabus, but from this MCQ, can they pick up the question, rephrase in a manner where they can ask true and false? Yes. So MCQ question you are not leaving, that is also homework. Now in this, whatever doubts you have, you will compile it in the WhatsApp group, the group that we have created. In that you will compile, say this question we have a doubt. I did not understand why this point has been given like this. So in the next class when I come, I'll be discussing those points. Then theory questions. So theory question comes in exams, 100% yes. Theory question will constitute 12 mark in form of true and false. 4 mark direct theory question. Direct theory question means what? What do you mean by principal books of accounts? Direct theory. Or they ask difference between. What is the difference between provision and contingent liability? Difference between question. What are the characteristics of this? What are the features of this? What is advantage of this? What is disadvantage of that? They can ask. So that could be for 4 mark or 5 mark. Like this, 1 question or 2 question or even 3 question could be asked. Am I clear? Sometime a 4 mark question, how they ask? In that 4 mark question will be 4 questions, each for 1 mark. Explain what is depreciation. Explain what is accrual concept. Explain what is outstanding expenses. Like that, they'll ask for 1 mark. This theory is what is going to help you to pass, and especially if you want to get 80, 90 and above, this theory is what is going to help you. So all the book back theory should be in your fingertips. Not just that. Come back in the theory, wherever you find the I'll show in some of the topic. They'll be given the advantage of this, disadvantage of so and so. Difference between, all the difference between question, all the advantage, disadvantage, limitation based question, all the feature and characteristic based question, all individual side rating based question. What is amortization? What is meaning of this? What is meaning of that? All the meaning related questions. Everything should be in your fingertips. In your test, you will also have the question based on this also. So right from day one, you have the hold. A lot of people last time had overconfidence. Theory, no sir. Last I'll do, sir. Nice bumbo they got. Look at the way the theory was asked. And there's one famous thing that I say. I say is always, judge me and I'll prove you wrong. You judge, this theory question should not come. You judge, a question from this chapter should not come. That will come first. I'm telling you, so many times it has happened that for at least some 6 attempts from this chapter, they wouldn't have asked the theory question or practical question. In that very attempt, if your luck is bad, if you don't study, your luck is bad, then the question from that chapter only will come. Now, my question is, why do you want to give a choice to your destiny? Study everything and go no. Whatever comes, we'll be in position to answer. Are you able to follow? So everything we should have hold on. Now, if any concept I'm not studying, if any theory I'm not studying, why? Because I'm being lazy about it. Why should you feel lazy about it? When you have to study means you have to study. Simple game. No, don't do selective study. None of the chapters selective study. Max, especially if you're a non-max background. Then 1 or 2 chapters, I might ask you, leave this. Or max teacher herself will say, leave it because it is more time consuming than the other topics. Weightage is also less, leave it. Only for non-max people. That time you leave it. Otherwise, none of the chapters you are going to leave it. I'm telling you, it happened with me in CA final. There's 2 chapters called as amalgamation and consolidation, which is now there for your CA inter. Did I say this point to you? Already said. So I didn't study consolidation and go. I studied amalgamation. But the amalgamation question, what they gave was very lengthy and tough. My balance sheet also did not tally. On the other hand, all my friends who studied both, they had a choice to decide which question to do. So they took up consolidation. Question was short compared to amalgamation, and people got the balance sheet also tallied. So in my position, what happened? Since I did not know both the topics, I was forced to take amalgamation because I did not know consolidation. So I was at the mercy of my destination. Sorry, not destination, destiny. At the same time, the other friends of mine, they studied both the chapters. They, on the spot, could decide which to do and which to leave it. We should always be like them. We should have the control that which chapter I'm going to leave in choice in the exam. We should not be at the mercy of somebody else. So have a control on all the chapters and don't skip anything. That is my humble request. Any problem here? Illustration 1. Can we do it? This I'll do it. No problem. One more time we'll do. 2 is homework. 1 I'll do it. Two, no problem. But two, I'll not do. Very lengthy question. No? So, sir is feeling very lazy to do it. Now, prepare the stationery account of a firm for the month of Jan 2022, duly balanced off from the following details. On Jan 1, inventory of the stationery is 480. Inventory of the stationery is 480, which means what? The balance brought down is 480. Jan 5, purchase the stationery by check. Purchase the stationery by check. What is entry? Purchase account debit to bank, sir. Sir, anywhere in the question did they say that we are in the business of buying and selling stationery? Had they told that we are in the business of buying and selling stationery, then stationery becomes my goods. So I'll take it to purchase account. But I am not the dealer of stationery. So I'm purchasing the stationery for consumption purpose. So I will record in the expense account. Which account? Stationery expense account, and not in the purchase account. Jan 15, purchase of stationery on credit from 5-star Stationery Mart 1280. 1280. What is it? Wonderful. Now please tell me, how did this stationery account have a balance brought down? What is the nature of the stationery account? You said you did homework. No? My question to all of you, this is what account? What is this account? All of you did homework, no? Tell. Is it income, expense, gain, loss, asset, liability? What it is? Who said, sir, homework done, sir? This question is not required. Who was that donkey fan? Tell me. Valid question. In the first go, you might look the stationery account as expense account, because in all the questions in 11th and 12th, whenever we came across stationery, we always by default took it as expenses. Expenses means nominal account. How on earth will nominal account have the balance? Inventory of stationery on Jan 1, balance brought down 480. How? So definitely this stationery is not. तो कौन आंसर देगा उसका? मैं तो कुछ भी बोलूंगा. Correct? No. So, sir, if the balance brought down is coming, sir, then this is not a nominal account, sir. This is asset account, sir. Tell me now. I don't know what is year ending. You tell me. What happened? First question, expense or asset? Expense or asset? No problem. Look at the answer and tell me. नीचे आओ. Okay. No, tell me. So which means when you were doing the homework, what was missing while doing the homework? Presence of mind, application of mind was missing. Now this is the biggest problem for the students while pursuing CA. When you're doing accounting, for that matter, any subject, if your brain is locked, while studying, you kept your brain in the locker or in fridge afresh. That is not going to help you in the journey of CA. That is not going to help you in the journey of CA. When you're doing it, you have to understand each and every point because you own it. Any question from any angle, from anyhow it can come. You have to own this. You have to ask questions. What is this? What is this? What is this? Now, please tell me, this stationery account is expense account or asset account? Tell me. Purchase of stationery by check. Purchase of stationery by check. So this is cash purchase of stationery. This is credit purchase of stationery. Tell me. Scratch your brain. Expense or asset? Balance brought down is given. Two possibility. So this stationery could be asset account. Stationery could be asset account. Or stationery is expense account, sir. Jan 1, if the financial year is April to March. Now, April's balance will carry forward in May. May to June. June to July. Like that, November to December. December to Jan. So can this be the accumulated expense from April to 31st December? Possibility is there. I'm not saying this is the only possibility I'm telling. When, if it is April to March financial year, If the financial is Jan to December, Jan 1 opening balance could be then asset. Now tell me, what do you think this is? No, you have to make assumption here. Listen to me very carefully. Accounting period. See, this is not going to affect as such, because while preparing the ledger, I can just directly record the ledger. Whether you consider this an expense asset doesn't matter. Just record it, the game is over. But you have to understand why this is happening. If you feel it is the accounting period, April to March. I told you for the expenses account, 1st April closing balance will become 2nd April's opening balance. Then 2nd April transaction. With that, I'll add 1st April transaction. So 3rd April opening balance is nothing but the purchase of 1st April and 2nd April both put together. So if you apply that logic, then inventory of stationery 480 is what? The opening balance means 480 worth of inventory is purchased. 480 worth of inventory is purchased. So that way it is my opening expenditure of that month. Am I clear? On the other hand, if you feel your financial is Jan to December, then this inventory 480 is the opening balance of asset. Why this is asset? Because whatever stationery you buy, all the stationery you do not consume it. You will study in this topic called as NPO. In NPO, you studied in 12th standard, matriculation people. We calculate cost of material consumed. 12 CBC people have studied this back. Cost of material consumed. Financial statement. Ratios. Cost of material consumed. What is the formula for that? Sir, opening stock of raw material plus purchase of raw material minus closing stock of raw material. Means what? If I'm buying 100 rupee worth of stationery, when last year I purchased, I did not use it. So I'm going to use current year. So this is the opening value of the stationery. Then current year, I purchased stationery for 500 rupees more. So total stationery purchase is how much? 600. 600 worth of stationery is there with me in the business throughout the year. Now, I can't record the entire 600 rupees as expense. Why? Because matching principle is coming into picture. Matching principle says that record expenses to the extent benefit received. If the entire 600 rupee worth of stationery is consumed, record the entire 600 as expense, no problem. But out of the 600, if 50 rupee worth of stationery not consumed, means that you minus it. So minus closing stock of stationery. So this is 550. This is called as cost of stationery consumed. So now 600 rupees is my total stationery expense. In that, 50 rupees is cost of that stationery which is not consumed. So balance 550 is what? Cost of stationery which is consumed. Matching principle says that record only that expenses from which you've got the benefit. You have spent 600 rupees, no doubt. But how much benefit you got it? Rupees 550 worth of benefit only you've got it. Benefit received means what? Consumption. By consuming, I get the benefit. So matching principle says record 550 as expenditure. Are you able to follow? So in that case, if I open the ledger here, opening balance of stationery, opening balance is how much? 100. During the year purchase is how much? 500. Closing balance is how much? 50. What happened to balance 550? This 550 is transferred to your P&L account. So by P&L account, 550. This is what is transferred to your P&L account as cost of material consumed. For this ledger is prepared. So stationery or any kind of these items, initially take it as asset. From that, what we are consuming, that will transfer to P&L. This is what that ledger is. So now, 100 rupee worth of stationery is there, unconsumed in last year. Last year, I purchased stationery for 1000 rupees. In the 900 consumed, how much is not consumed? 100. When will I consume? In future. So that 100 became the asset of the last year. Closing asset of the last year. Opening asset of current year. Current year further purchase for 500. Total how much asset you have? 600. Out of 600, at the end of the year, how much asset you have? 50 only left. Out of 600, at the end of the year, only 50 is left. What happened to 550? In between there, you have consumed it. Am I loud and clear? One more time. Opening balance 100. During the year 500 purchased. But while I came at the end of the year, it is only 50 left. You had 600, only 50 is left. Now what happened to balance 550? 550 is consumed. To the extent the goods are consumed, that becomes your stationary expenses. Any problem here? Am I clear? This is that ledger. So now, opening inventory is how much? 480. So last year, 480 worth of inventory purchased, but not consumed in the last year. I'm hoping to consume in the current year. So 2 balance brought down 480. 2 balance brought down 480. Then purchase current year 800 and 1280. So purchase by check. What is entry? Stationery to bank. So in stationery account, to bank. 5 January, to bank 800. Then credit purchase. What is entry? Stationery to 5-star, 5-star stationery. So in stationery account, 2 5-star stationery. How much? 1280. So what is the total purchase? 2560. 2560. Now that is my balance carried on. Why? Because consumption I'll see when? At the end of the year. If the financial year here, the financial year is April to March, then I'll pass the closing entry. That is this entry. By P&L entry, I'll pass on 31st March. If the closing year is 31st December, then that closing entry P&L to stationery I'll pass when? On 31st December. So now 31st January is not the closing month. So whatever the total purchases is there, opening and current year, everything put together will be recorded as my total stationery expenses. Now here what I'll do, in this 2560, how much is consumed I'll see. That I'll transfer to P&L. Remaining which is not consumed will become the balance carried on this ledger further. Imagine, I'm telling you, out of this 2560, 560 worth of asset is not consumed. 560 worth of stationery not consumed. So how much is consumed? How much is consumed? 2000 consumed. So that I'll transfer to P&L. So what is the closing entry there? So on 31st of March or 31st of December, transfer of stationery. Stationery, when you record it, you debit it. To create stationery, you debit it. To close stationery, credit. In place of the debit will be what? P&L. P&L to stationery. In P&L to stationery. In stationery, by P&L. So by P&L will come. How much? In our example, 2000. So automatically, whatever is the balance carried down, 31.3 or 31.12. By balance carried down will be how much? 560. So until the closure of the year comes, the consumption will not be recorded. Consumption is always recorded at the end of the year. Until then, the opening balances and purchases will keep on accumulating. So here it got accumulated. At the end, we will see the consumption part, and the consumption part alone will be taken to P&L by passing the closing entry. And this is done in satisfaction of matching principle. Now tell me. In CA, getting the answer is not important. Understanding why this is coming like this is even more important. That is the difference between a normal CA and a dummy CA. Both are CA. One CA is passed by knowing how to do the sums. By doing the sums, you can clear. Here you will save yourself. In the real world, when you meet people like us, we will ask, rip you apart in the interview. Tell me this, tell me that, tell me this, tell me that. This also you don't know. Who gave you CA degree? Like that people will ask. Like that, do you want to become a CA? No. Each and everything what you're doing, you should own it. You should own it. You should understand why you're doing. To that level, you have to apply your mind. Am I loud and clear? This ledger is clear or not clear? Now understood why I touched this ledger? Though I gave us homework. Okay. Illustration 2, I will not touch. Permanently homework. Unless and until you have any doubts. Any doubts in illustration 2? No doubts. Okay. All these are laborious work. Enjoy. 3 over. True and false homework. MCQ homework. Theory questions homework. Practical question also homework. Same thing for unit 1 also. Unit 1 also. Theory questions, MCQ, true and false. Practical questions, all homework. Now, next class, I'll be doing trial balance and I'll try to wind up trial balance in the next class itself. So before that, what will you do and come? Trial balance from the TSL book. First work out and come so that next class becomes easy. Can we wind up? Chalo. So you're staying back for 12 people who wants to stay back and stay back for goodwill topic. Other can go home and enjoy. Today's what? Oh, today is Tuesday. Sorry, I have my inter class at 6:30. Sorry. Okay. We wind up? Chalo. Guys, that's all from my side for this session. I'll see you in the next class. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you.
Thank you, sir.